Is the tax man quietly stealing your investment dreams? Many think low fees are all that matter, but taxes could be eating even a bigger chunk of your returns. More than you think, we're revealing 8 assets you can compound to outpace inflation and the tax man so you can protect your wealth. So what's this compounding everyone's talking about? It's basically earning money on your money. And then earning even more on that money. Think of it like this: you plant a seed, it grows into a tree. And that tree drops more seeds that grow into even more trees. That's what happens when you reinvest your earnings instead of spending them. Let's start with some safe and easy options. Certificates of deposit, or CDs, are like time capsules for your money. You promise to leave your money with the bank for a set amount of time. And they promise to give you a little extra interest in return. Because the term is fixed, they generally offer better rates than typical savings accounts, which are also generally very safe. Then there are high-yield savings accounts. These are just like regular savings accounts, but they offer a higher interest rate. They're great because you can still get to your money if you need it, and your savings are usually insured by the FDIC. However, rates can change. Next up are bonds and bond funds. When you buy a bond, you're basically lending money to a company or the government. They promise to pay you back with interest. With bond funds, you can diversify easily, investing in a whole bunch of bonds at once. Government bonds are generally very safe, while long-term corporate bonds may have higher returns but also higher risk. Reinvesting the interest is important for this strategy. Now let's move on to some assets with a bit more potential, but also a bit more risk. Dividend stocks are shares of companies that regularly pay out portion of their profits to shareholders. The real magic happens when you reinvest those dividends to buy even more shares. It's like planting those tree seeds again and again. Look for companies with a long history of dividend payments, sometimes called dividend aristocrats, as they tend to be financially stable. Real estate investment trusts, or REITs, are another way to get into the real estate market without actually buying property. These companies own or finance properties, and they distribute a big chunk of their income as dividends, just like with dividend stocks. Reinvesting those dividends can lead to some serious compounding. Remember though, the market price of REITs can go up and down, particularly when interest rates rise. Finally, we get to crypto staking, which is definitely on the riskier side. Staking is like putting your cryptocurrency to work. You lock up your crypto to support the blockchain network, and in return, you earn more crypto. Reinvesting these earnings helps to compound your holdings. Keep in mind that cryptocurrency markets are volatile, so that the value of your investment can change rapidly. Do your research and only invest what you can afford to lose. Also, be aware of the tax implications and any counterparty risks from using staking platforms. No matter which of these assets you choose, remember that managing taxes is a big part of smart investing. Make use of tax-advantaged accounts like IRAs and 401(k)s, so your investments can grow tax-free or tax-deferred. Another part of efficient investing is understanding that after-tax returns are always what matters most. Also, consider the fees associated with different accounts and funds. To really make compounding work for you, you need a smart strategy. Start early. Regular contributions are key. Diversify your portfolio, understand your own risk tolerance, and choose assets that fit your comfort level and financial goals. Strategic management and planning will make or break you, so be very considerate with your time. Now you know about best compounding assets to invest, but there are also risks to be aware of. The market can go up and down, and nobody can predict the future. Economic downturns can impact investment returns. Unexpected expenses can derail your financial planning. Just don't put all your cash in one basket. I've given you all the tools. Now take the leap and start building wealth. The power to control your financial well-being is here, so start early and build a secure future. Now I've covered a lot in this video, but I couldn't address everything. For example, everyone's financial situation is unique, so what works for one person might not work for another. Also, this video is not financial advice. You should talk to a qualified professional before making any decisions about investing. One also has to be aware of the tax implications, and this will be entirely your responsibility. Remember, you're buying, selling, or investing at your own discretion. There are also potential regulatory changes to keep in mind. If you found this video helpful, please give it a like and share it with your friends. And if you want to see more videos about investing, building wealth, and taking control of your financial future, subscribe to my channel and hit that notification bell. Let's grow together. Thanks for watching. Remember to save and invest smartly to reach your financial goals.